How's it going, Forex traders? Welcome back to my channel. My name is Desmond Samuel, and I'm back on you with yet another Forex forecast. And sorry for my voice, guys. I think I just have a bit of a cough or something. So, in that past weekly forecast video, I actually came on here to talk to you guys about the possibility of having NASDAQ melt towards 26. Oh, by the way, guys, before I actually move forward, my name is Desmond Samuel, and thank you so much, guys, for 3,000 subscribers. Thank you so much. We hit 3K last week. Thank you so much for your support, guys. I don't take anything for granted. Don't worry, as time goes on, I'll come on here fully to host a live session where I can actually thank you guys properly, thank each and every one of you properly. But thank you so much. It's been a journey of 4 years now. Thank you so much for 3,000 subscribers. I'm really grateful. Yeah, and if you're new to the channel, make sure you click on the subscribe button and then turn on the bell icon as you do so that you see these videos as soon as they drop. All right, so for NASDAQ, what really happened was, you know, I've been a student of history for a while. Let me just say it properly. I've been studying history for a while, particularly the how the forex market moves. Yeah, now you need to understand that this is it. Yeah. So now in recent times, I've noticed that whenever the market fails to give us a proper, like a deeper pullback, and then follows that up with a bullish engulfing candlestick pattern, it tends to continue in that direction upwards, or bearish if a sell or a bearish market or a bearish trend is the case here. Let me explain that to you shortly. So now look at what's happening right from this point. In fact, let me just share this real quick, especially on the S&P 500, NASDAQ and US 30. Okay, now right from this point, I was anticipating a deeper pullback towards this yellow bar. If you've been with me, in fact, point was that I was actually looking at this buy, because this was where the demand level had the first bounce. This was a weekly engulfing bullish candle, quite significant. Yeah, so I was thinking market almost like a pullback deeper into 21,000 basis point for us to go long, but that didn't happen. Instead, what I noticed was that whenever the market comes that close to the POI, you need to pay attention to the current internal structure. Do you understand? So now let's see. This is the weekly. Yeah, so let's talk about the daily time frame now. Let's see how that looked on the daily time frame. Now you need to understand that as you count your waves both internally and externally. Do you understand? So now looking at this closely, I did actually see that this came on here. I mean, after we had put in, we went short on this pair, we're making all the way to the downside, and then on our last trade here, this was supposed to be a trade for us to take, but I didn't like the pullback I got. I mean, usually whenever the market wants to reverse at a certain level, it will slow down around that level, but this gave us a bullish engulfing candlestick pattern, followed by another bullish engulfing candlestick pattern, but it didn't really give us that slow down pullback, or maybe a far engulfing bearish candle here didn't happen. Instead, we just blew through. So I just knew that, okay, fine, whenever this market does, so two things here, is either it breaks above this trend and then give us a decent shorting opportunity to buy, rather a buying opportunity, longing opportunity here, or it tests this trend and then returns downwards. But the bullish case was what played out here. So I noticed that whenever this happens, I simply bring out my counter trend line and just mark it up properly. So whatever happens around here determines how I react to the market. And I've noticed that since April 2026, this has been the case on S&P 500, on NASDAQ, and then also the US 30, and then German index as well, DAX or GER 30. All right. So this is how it is. Whenever the market blows through here, it goes on to make a new high. I noticed that over and over again. I said, okay, fine. You know what? Instead of just looking to short this guy, of course I was keen on my short here to just see this guy collapse all the way down. But I noticed something very significant here. If you look at this pair here, this is a high, this is a low here, this is a swing level at this point. So scale out to your 4-hour time frame. Please, I'm so sorry for the voice, that my voice has been really horrible lately. So look at this now, looking at this. So if you count your waves properly, so this is a low, this is a high, higher, low, higher, high, higher, low, obviously. So if you bring your trend lines, your Fibonacci rather, from the swing low of this guy all the way to the swing high. The swing high was all the way up there. Yeah, let's see, all the way at that green bar level, like so. Now scale back up to your daily time frame and see where that leaves you. This shows that the market came right into the 0.6 region, like so, and then bounced off of there. Do you understand? And then also, if you look left, that level had a demand level there playing around. So it was pretty simple for me. So all I simply did was, after the Forex forecast last week, I said, okay, fine, this market has gone ahead to give us a bullish engulfing candlestick. This was a weekly engulfing candlestick, as you can see, weekly, and then the previous week closed out as a bullish pin bar. Okay, this is a pin bar, like so. This, whenever you have the market be a full bearish candle, and then next thing falls all the way up, all the way back up to give a small body and a tiny wick. This is the pin bar, like so. So followed by an engulfing candlestick. I just knew that this guy was not done with the upward trajectory here. So what I simply did was I scaled down to the 4-hour time frame after that engulfing candlestick, and what I simply did was I just brought down my counter channel, like so, and then I said, okay, fine, since that's the case, let's play to the upside. So from this third swing higher all the way down, I said, okay, fine, for me to go long on this pair, I must see a breakout and a retest of this channel, like so, and a balance off of the demand level, because this is a demand level, like so, then I go long. So that was simply what happened, and this is how it is playing out so far. So in the Telegram group, which is why I want you guys to check the link in the pinned comment, like so, and then come to the Telegram community, or best case scenario, get the paid course or paid mentorship. It gives you access to all those things. All right, so this trade was called out to them on time, and they made money from this trade. I still making money in this trade. I had another entry in here, like so. Once I looked left and I saw that the market had some demand level play right there, so I just capitalized on that, really. All right, so then I had another entry. So I have two entries running. First entry was there, now broken even. So this is running risk free, as you can see. So now prime target remains at 30,735 or 30,800 basis points for NASDAQ. Then subsequently we should this guy rally all the way towards 36,000 basis points for NASDAQ, really, because you need to understand that these indices always makes a new high whenever they are trending, new highs every time. All right, same thing with the S&P 500. If you've studied the past for some time, now you can see the same pattern that happened. Let me just go over it again for the sake of training, really. So this is it. If you draw your traditional Fibonacci from here, from swing low, or even from here all the way to here, you notice that it won't make any sense. Do you understand? And you'll be thinking that, okay, fine, the actual place for the demand level to be will be here, but that's not the case. All right, because now the market, like I said, now it moves based on internal levels as well. All right, so simply what I did was, as soon as I saw that this was a significant level, like so, again, this pattern has been recurring over time on the S&P and NASDAQ, and then also the indices across the indices market here, really. So now when I saw this from swing low to swing high, the market came right into the 0.5 region, like so, as you can see, and then bounce off of that, and then it didn't just bounce off, it gave us a bullish engulfing. Now pay attention to these things: bullish engulfing Fibonacci, bullish engulfing Fibonacci trend lines and demand levels. Yeah, those are the 4 or 5 things we really work with, really. So this was it. After this engulfing candle, I simply scaled on to the 4-hour time frame. I said I'm familiar with that pattern. I know where this ends up. I know what happens after this. Yeah, so I just simply brought up my counter channel, like so. Then I just plotted it nicely. I said, okay, fine, once we blow through this channel, like so, we should be up and running. And that was what happened. Yeah, entries were here, stops below this. Now when you're entering your stop loss, take into account the current low, which is here. Remember, this is international counting, so this is a low, this is a high, higher low, higher high, higher low. So the most recent low is this one here. So once you make an entry here, stops are below structure here, and then ride this guy all the way. I like to leave my TP open when I'm trading the indices, because they tend to make new highs here, and you can't really tell where the new high will stop, really. So it doesn't happen again on S&P, and then this will happen again. It blew through, and now for S&P, we've been dancing around in a range. So I'm waiting patiently to see what S&P has to offer. If we do blow through 7,800 basis points, as I assume that we will, I'm seeing S&P give me a new high. Really, for my prime target for S&P remains 9,800 basis points. This might take like 2 years to hit, but that's just my target. Yeah. So now on gold, guys, my voice is so strained. On gold, we are this is silver. Here's gold. Okay. Now on gold, I don't have much to say on gold at the moment. I'm not really liking what I'm seeing. I was thinking we will get more chance to short this guy, but it's not looking like so. So let's see what happens. Gold has a very tricky scenario here where we are stuck between this supply level and then this trend line play, like so. Supply level and this trend line play. So anything is possible at this moment. But I'll just advise you to stay away from gold for the meantime. Yeah, allow gold sort out his own, its own trajectory. Then he can actually come and then trade this pair. Otherwise, you get burnt in the process. You cannot guess direction for gold. Allow gold figure out what he wants to do. Same thing with BTC. Yeah, allow them find their region, find their trajectory, find their direction. Then you can come in and then trade them. Because as it stands, I'm not moved by any of these shenanigans. Do you understand? Then likewise silver. Yeah, silver also has the exact same scenario. Now for me, silver, in fact, silver even has a clearer play for me, because all I simply need to do is, once I see a bearish engulfing candlestick here, it is a simple Fibonacci play, and then I can come here and let you guys know what exactly is happening. But it will be a 50-50 scenario for me. Let's see what happens. Let's see what happens, really. Let's see. But I'm not promising anything on silver, but let's see. I'm still thinking that silver might rotate downwards towards $48 per troy ounce. And then also oil, nothing much on oil. Let's see, US HF, okay, not much. So now the euro dollar at the pound sterling, and then the NCD USD, all these pairs are reacting to the dollar index being weak at the moment. So there is nothing much to see here. We only go bullish on the dollar if it does break above 101.568 region. That's that about that, I believe. And let me see any other pair. Okay, so that's just about that. So guys, to get proper intel to get proper intel and timely reports, you need to get into the Telegram group or enroll for the mentorship program. Either ways, you land in the Telegram group, and they also get access to these things on time, so they can also capitalize on these trades on time. All right, so I believe I've covered every single thing. Quite frankly, NASDAQ still has some more room to the upside. Once we blow through 30,700, just be on standby. Once I blow through this green bar like so, there will always be another chance to get in. Then I'll let you guys know exactly what. Just to find a pullback somewhere inside of here like so, then shoot this guy all the way up towards my 36,000 basis point target like so. And that's that about that. I'll catch you guys in my next video. For now, trade safe, apply proper risk management, click on that subscribe button, and then turn the bell icon, and then give me a like, and then also let me know what you think about the video in the comment like so. I'll catch you guys next time. For now, trade safe.